Welcome, everyone. I am so excited you're here because today we're diving into one of the most powerful tools in the trader's arsenal, and that is technical analysis with a focus on Fibonacci and, of course, Elliott waves. And I will show you throughout this presentation that I use a hybrid of Elliott wave patterns that are a little bit more aggressive, but that doesn't mean that they are riskier. You just get uh, entries, much sooner entries with it. So now this is not just about drawing pretty lines on the chart. Fibonacci is the blueprint of the markets. It's the, let's call it hidden rhythm behind the price movement. It's the DNA of trends, pullbacks, and breakouts. And when you know how to apply it with precision, and when you know how to apply it, you can spot really great high probability trades that give you an edge to generate consistent income and also build long-term wealth. And this is what the presentation is all about. It's about swinging into wealth. These strategies can be applied into day trading as well as investing. So during this presentation, I have a lot of surprises for you guys on some tips on how to get started as well. But we're here to identify some Fibonacci levels that institutions and algorithms respect because it's all about algorithms these days and AIs. And just remember that very close to 90% of the market volume is generated by algorithms, high frequency trading computers. Also, we're going to talk about how to use these retracements and extensions to time your entries and exits, and I will show you some live examples for the market, actually for the Qs, for the SPYs, because they are in a pullback and they have created little tops. And we're also going to talk about building a strategy to scale from day trading to swing trading and even to investing, and of course, managing risk while maximizing profit potential. So you're not just making money, but you're also keeping it. So by the end of my presentation today, you'll understand why I love using Fibonacci's. And it is only one slice of my technical analysis. It's not, I don't base everything on Fibonacci because I am a true price action trader. I'm also into the my personal hybrid Elliott wave system as well as very keen to patterns and other indicators that you will see on the chart. So it's not just Fibonacci on its own or Elliott waves on its own that is creating the roadmap. So get ready, take notes, and actually unlock the power of Fibonacci. So let's take your trading, your income, and your wealth building to the next level. So my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com. And I have created this company more than 15 years ago. And it was never my intention to start educating individuals how to day trade and invest into the markets. But here I am today. So I'm a personal, professional, independent trader that is focused on making my money work for me. I'm an investor, I'm a swing trader, and I'm a day trader for the last 25 years. And I have been dedicating and improving people's lives through trading and investing for over 15 years. I have also 10 years and more than 10 years experience in investment banking. I'm a very successful trader and investor without a losing year to date. And I specialize in high velocity trades. And one of the reasons why I locate these trades is because I do use Fibonacci's as well. So before we actually get started into charting, just want to put this into perspective. And, at some point through your life, whether you're now into your 20s, now maybe you're in your 30s or 40s or even 50s or 60s, do you guys know that we need to build a nest egg, right? To live comfortably and not having to worry about anything in the world. Now, let me tell you something. Trading is one of them. But in the long run, like investors feel that they need an average of $2.5 million to have in their retirement accounts to maintain their lifestyle, according to a Legg Mason survey. Did you guys know that that is like $2.2 million more than the average balance of $385,000 those individuals actually had in their 401ks, IRAs, and similar plans? It is crazy pants. Now, welcome to the future of wealth creation and get ready to unlock the fastest and the smartest way to grow your money. And you're going to do it better than any hedge fund out there because we're going to talk about hedge funds here in a second. And I'm going to give you some stats from hedge funds, and you're going to be shocked of how they are performing. So the hidden wealth secret of the top 1% lies in this presentation right here. So swing trading is the key to multiplying your money with precision because swing trading allows you to dive into a time frame that is too let's say it's too tight for investors, and this is a strategy that a lot of a lot of hedge fund managers are trading, and it's too wide for day traders. So it's a niche. It's somewhere in the middle. Okay, so this is the key to live through trends, not the whole entire trend, but to take portions of that trend out. And as soon as the first reversal comes, you're out. Now, did you guys know 80% of Americans are worried about having a secure retirement? 21% say that it'll need a miracle for them to retire securely, according to a recent survey. And by the way, it's the same survey. Retirement feels impossible for 1 in 5 Americans, according to the same survey. But guess what? You don't need a miracle. All you need is a plan. It's a really, really good plan. Now, here's what Warren Buffett said. If you don't find a way to make money while you're sleeping, you're going to work until you die. And he's right, right? Okay, so here we are going to talk about money making, the money making machine. Even if you have a full-time job, even when you're on vacation, your money can work for you, or whether you are anywhere in the world. Okay, so you can manage your money better than any professional. So I told you that we're going to go a little bit back and talk about hedge funds before we actually dive into charts. And I'm going to present my case on why you need to get started with this. So first of all, you're going to have huge fees in your long-term money accounts, your 401ks. If you have somebody else manage it for you, you can manage your own 401k. Monthly management fees, that is approximate on the low side, $300 a month. That is on the low side. Again, that is about $3,600 a year. Now multiply this by 30 years, and that is $108,000 in management fees. Imagine if you put $300 and keep on compounding it into the market. Oh, yeah, you would get here with a much better profit. Just use a investing calculator and compound this $300 a month for 30 years, and you will be surprised. Okay. All right. So funds do not care if you make money or lose money. And by the way, you don't have to have a 401k account. You could trade it at any kind of retirement account, whether it's an IRA, Roth IRA, or even a retail account. It doesn't matter. It's the taxation that is the one of the debatable issues here. But at some point, you're still going to pay some taxes. So, anyways, so here is how you can avoid pitfalls. These are the 5 mistakes that are going to cost traders thousands of dollars. So, mistake number 1, chasing the wrong stocks. Trade the right stocks, and by the right stocks, I mean stocks, and we're going to develop upon this topic in a little while. I'm talking about the right stocks, the stocks that have volume, the stocks that are in a right technical pattern, not the hyped ones, right? So avoid the hyped ones. Remember that, at some point in time, there are some hypes around cannabis stocks, around, let's say, nuclear stocks. All right. I tend to be a little bit more conservative because these are the types of stocks that are subject to big spikes or big drops. Mistake number 2, over trading and burning out. More trades doesn't necessarily mean that you're going to make more profits. So learn the power of patience to wait for the right setup into the market. Wait for the pullback. Now you're seeing that the market is pulling back. Now we had 2 days in a row. We had the pullback, and now we're having the third day, right? So wait until you have some kind of confirmation into the market, and we're going to get to charts in a sec. Also, trading without a plan, random trades, random results. You need a proven strategy and a proven system. And if you have the patience to wait for your system to take place, for your strategy to come to life, you're going to have really great results. Mistake number 4 is letting emotions control your trades. Don't let emotions control your trades, because if you have a plan, there is no room for emotions in that plan, because you have a designated area where to take profits, where to raise your stop. And even if the trade goes against you, you have a designated area where to take your loss. And you know that your loss is not going to be greater than whatever you risk your per trade. So for example, whether it's your 1% or 2% of your capital. And then mistake number 5, not investing in the right education. Okay. So I don't care where you're getting your education from, but make sure you have like really good knowledge of technical analysis. That's all about. Because if you know how to handle technical analysis, and not necessarily like fibs or Elliott waves are a little bit more complicated. But if you know how to navigate the market through technical analysis, which, by the way, remember what I said, 90% of the market, close to 90% of the market volume is generated by algorithms. Algorithms do not react based on fundamentals, do not react based on anything else other than technical. If they see a technical level, if let's say you're getting a pullback to a certain fib level, or you get a pullback to a moving average, or you get a pullback to a prior support zone or resistance area, it's going to react. Okay. So if you know technical analysis, you're set for life. So self-directed trading and investing is all about taking control of your financial future and managing your own money, because nobody's going to do it better than you. And this way, you're going to make your own money work for you. And by the way, you don't have to start it. And I had this conversation with somebody else, with someone, I'm sorry. And that person was telling me, he's like, oh my gosh, I don't have money to invest. And I'm like, here's the thing. Like, the big guys out there want you to believe that you need this phenomenal account that you need to start trading or investing. It's not the case. You could start trading. You could start investing with $500. You could start open a Webull account or what have you. So you could start putting money to work for you. It's the only way to get to your goal. So swing trading is about generating cash flow. I absolutely love swing trading. It's my favorite style of trading. I have to say, I love day trading. I'm really good at day trading, and I day trade actively. I've been day trading for 20 years, 20 plus years. But I love swing trading, because with swing trading, you're not glued to the computer. In day trading, I'm pretty much glued to the computer in the first hour. But with swing trading, I just look at my stocks, my active stocks, probably about 10 minutes a day. That's it. That's it. So that's actually less than 30 minutes in a week. And then it takes me about, I would say, half an hour to scan at the end of the week and through the week as well, to find new trading opportunities. So it's not time consuming. You could do it at any time of the day or any time of night. And by the way, you generate more income. You could generate income from swing trading as well, generate that cash flow, and get some of that profit and put it in your long-term account. And the best part is that you don't have to be a math whiz. You don't need a finance degree in order to be successful at what you do. Now, let's get it technical. Now, did you guys know that every year stocks move about 20 to 30%? Maybe more? How crazy pants is that? And this happens at least a couple of times per year. So, are we in a correction now? Are we in a bigger correction now? And I think that we are getting ready for a shallow pullback. I don't think this is going to be a big pullback, because we're getting ready for window dressing. And window dressing is going to take effect, actually starts about now into the end of the quarter. So you guys know we just have very few days left into the end of the quarter. In fact, we have Friday, we have Monday and Tuesday. And Tuesday, not only that we're going to have the end of the month, but we're going to have the end of the quarter. And this can produce typically 2 to 3 days before the expiration, the quarter end, you can expect a little bit of window dressing. Now, for those of you that don't know what window dressing is, this is a system. This is a pattern that is observed in the market where hedge funds dress up their portfolio. They ditch their losers, so stocks that had been underperforming throughout this quarter, they're getting sold, and they jump into high-flying stocks. So if you see a stock that is moving higher, let's say into tomorrow, or I believe that this is going to play out more into Monday, Tuesday than tomorrow on Friday or today. Okay, but we're already seeing a little bit of rotation that is happening into the market. I've been day trading in the morning. I took a reversal in NASDAQ, so things are shaken up there. All right, so let's continue. So what is swing trading? It's all about catching the sweet spot moves, right? So before we get into our analysis, we want to know, okay, what is the strategy that we're going to apply and what is the system that we're going to trade on so we can apply different aspects of technical analysis. So it's all about catching the sweet spot moves. Those price swings that play out over days, not minutes. Instead of scalping tiny intraday moves or sitting in stocks for years, swing traders ride the powerful short-term waves into the market. So how long do we hold? Okay, so swing trading is not like day trading. You guys know in day trading, you get in and out, in and out, in and out, right? You sometimes stay in a trade for a couple of minutes, sometimes for a half an hour, sometimes for 2 hours, depending what kind of trade, but you're out by the end of the day. In investing, I get in now and I may review my trade a year from now or 2 years from now, or if it's for generational wealth, if it's high dividend income or what have you, you're going to have it for decades. So in swing trading, typically I'm holding a position from a few days to a few weeks. And of course, it depends on the market environment. So think on an average of 2 to 10 days. And some trades stretch into a month or two if the momentum is strong. But the goal is quick, repeatable wins, not long-term babysitting. So bottom line, swing trading is fast enough and it keeps you excited, but slow enough to stay sane and precise enough to be consistently bank profits. Now, this is a chart of the Qs. We're going to go live charts in just a second, but just want to show you that from May, right here, okay, from May till now, the Qs had, till the high, when we had the high, the Qs had a 48% gain. That's 48%. Just remember these numbers right here, okay? Here's another one. The swings, right? So this is an overall move if you hold, okay? Now, here is the swing because you're going to make more money swing trading than you are going to make investing. Here's why. Because you're going to live through the momentum before it starts pulling back. And at the first sign of reversal, you're exiting. At the first sign of reversal, you're getting back in. At the first sign of reversing, you're exiting. You're letting it fall just into a support zone. Look at the double bottom here. And then you're rotating again. You're back in here again. Higher low. You're staying in. Reversal, you're out. Little bit of a base here. You can get in again. You can put your stop and break even. Reversal again. It reverses again back to the upside. And you can see that if you go into swing trading, and by the way, this is a weekly chart. This is 28% plus 21% plus 25% plus 44%. That is definitely more than the 41% here. 48, I'm sorry, then the 48% here. This alone is 44, 20, 25, 22, etc. So here's Microsoft from the swing low to the swing high. And by the way, this is from that Liberation Day, right? With the tariffs, since we had the tariff implementation, right? April till now, 63%. Okay, Google, this is March through September, 73%. Here we have the Qs. And again, if you add them up, okay, you will get a much better percentage than you were just sitting in the trade. because it's in and out, in and out, in and out, in and out. And then that is within 2 weeks to 3 weeks max. Here's another one. This is actually my biggest percentage gain in my personal portfolio. That is FNMA. Okay, this is, look at this one. Okay, from January till now, 453%. It'll put any hedge fund to shame. Okay, seriously. Now, here's this. On January 3rd, and this is the recording right here. I have the recording. I do a forecast. I do a market forecast. And on January 3rd, I did the forecast for this year. I do it every year. And at this point, Fannie Mae came into our attention. Okay. And actually came to our attention in December, where I legged in. I only bought like, I think I bought like 400 shares of it. It's a very cheap stock. So I just legged in a little bit. I really didn't have a lot of time. It was holiday season. I really didn't have a lot of time dedicated to trading, but I just bought some shares. Okay. So it was below my risk tolerance. And then in January, I added. So here's the thing. Fannie Mae and Freddie Mac may emerge from conservatorship in the next 2 years, potentially leading to their public listing around 2026. We're getting closer. Okay. And this was on January 3rd. Okay. Here is Fannie Mae. Okay. Here is my percentage gain. Okay. Here's my percentage gain. All right. And here it is. All right. It was trading at $15 in September. Now, new report finds almost 80% of active fund managers are falling behind the major indices. That's not good, right? That's not good. So here it is. Hedge funds are on track to deliver their target return. So they're happy. Okay, so they're happy. Hedge funds are on track to deliver their target returns of 9.3% for 2025. Are you kidding me? Okay, are you kidding me? Are you guys looking at this right here? And this is on only one stock. You can manage your own money. But again, do your due diligence. So money managers and hedge funds live mostly off commissions and fees. You're just an account number to them. Whether the stock or fund performs or doesn't perform, they get paid. So Barclay Hedge reported that over the past 5 years, the average hedge fund in its universe produced a net annualized gain of 7.2%. So swing trading is the most effortless style of trading. That's why I love swing trading. But here's the thing. You need to know and you need to respect the rules of the game. And you need to be patient to wait for the setup. So now I'm going to go over some live charts over here. Okay, so here we have a chart of the Q. As soon as I see a rotation happen, and this is on the daily chart because I've mentioned before that we had 2 consecutive days down. Okay, and you can see here that we're still gravitating into this 10 exponential moving average. I use these moving averages religiously because there are tons of algorithms that are built into them. You can see how the price action has pushed the price up above here, the 10 EMA, and you can see the lift over here and that bottoming tail that formed right at the 10 EMA. Okay, so I was telling you guys that I use a hybrid Elliott waves. Stay tuned and pay attention. Okay, so here's the thing. If you notice this area to the left-hand side, okay, this is resistance, right? This is heavy duty resistance. Now this resistance, and remember, this can be like an A, B, C, D, okay? So this resistance to me, and this is so much easier, such an easier approach to trading, much easier than applying Elliott waves so with Elliott waves, you have to wait for the A, B, C, D pattern to form. So basically higher highs, higher lows to form before you actually get into a trade. So the move is long gone. It's the same thing as with the RSI and all the other indicators. Like before, like you want to be very fast because the volume in the market is very fast these days. And if you wait for these indicators to line up, you're never going to get in, or you're going to get in super late. So by the way, this is the resistance that now is creating a minor support. Minor support is only present in super high trends. And this becomes an anticipation point right here into this prior high. So this line in the sand right here is also called a flip line. So that means that when the price action is coming in, we'll have the option of rotating immediately and going back up. So I know there's a lot of chatter that the market is going to pull back because we're getting into the most volatile month of the year, which is October. Okay, so it's very spooky. It's a real thing. October is very whippy, and especially the first 2 weeks until earnings season starts, you're going to experience really high gyration in the market, and you have to have a really good trading plan, especially if you're day trading or swing trading. So this becomes the forecast point at which the rotation happens. It's super easy. This is the hybrid Elliott waves. You don't have to do the ABCD. You don't have to do anything. You just have to have a point to the high translated to a horizontal line, because chances are when the price action is going to come in, it's going to start reversing and start moving higher. Okay. So that is number one. So I have this line in the sand, and I'm going to show you exactly how I perform my analysis here. All right. So I have this line in the sand right here, as you can see. Now, the other thing that I'm doing, I got to take this out. Okay. So the other thing that I'm doing, I'm going to my fibs. And what I'm going to do here, I want to see that if the market is going to pull back, if I have any critical levels that are around, let's say this 580 area, which by the way, it's a fulcrum. Okay. It's created from here. It's created by price. It's created by the rising 20 SMA. And we've seen in the past a beautiful symmetry around the 20 SMA. We've seen rotations happen around the 20 SMA. Rotation here back in June around the 20 SMA, a pullback here very close to the 20 SMA. So we've seen the price action affinity to this 20 SMA. Let me just take this out. Okay, sorry about that. All right, so now we're back here, and I want to find out where the price is likely to pull back into, and if it's going to have a double support zone into the same area that will sustain the move higher. So I'm grabbing my fib tool, pointing to the most recent low and recent high. And I'm noticing, you see this yellow area right here? This is basically like the golden mean. This is the happening place. So this retracement right here that is into the Qs, you can see that is lining up perfectly with the prior high. And this is going to be a 50% retracement. Now, 50% is not a fib. It's just a measured move from swing low to swing high. A lot of traders make that mistake and say, oh my gosh, 50% fib. No, it's not. It's not a fib. It's just a measured move. Fibs are the 61.8%, the 38.2%. These are the fibs, okay? 50% retracement is not a fib. But this is a retracement. This is a textbook retracement. So there are algos out there, and there are institutions that put limit orders around the 0.5% and put limit orders at the 61.8%. And what they do is that if the price pulls back into these areas, they get filled. Okay, so they get filled. What I do like to do is I don't like to put in limit orders, but I place alerts because I don't want to get in. And in case the market decides to break below the 61.8, I don't want to keep on adding on the way down because I'm not investing. I am swing trading. If you're investing, you could do that fine. But when you're swing trading, you want to wait for the price confirmation of the pullback. You want to see that confluence level from the prior high, from price, along with the fib. And so this is that hybrid Elliott wave with the Fibonacci in one chart. So what I'm doing is I'm placing alerts at the top of the base here, at the top of this pivot, around the 0.5%, so the 50% retracement from the swing low to the swing high. And I'm putting alerts here as well. So I'm putting one on top at 38.2. I'm putting one at the 61.8 here. Okay. So where this yellow area is on my chart, because this shows me a good visual at where the buyers may be lining up. Now, there is one other thing that I'm monitoring. Okay, so I've mentioned the 20 SMA, right? So that is one thing. I've mentioned that I have a prior high. That's the second. I have the fib retracement. That's the third. And my fourth indicator is the volume. Because if the volume is not going to rotate, you can see here that the volume has been declining within this past 3 days. So it has been a constant sell. It has been an organized sell into the market. So that shows me that some funds are just selling a portion of their Qs. And that is probably profit taking ahead of the quarter end, right? Ahead of because we're going to get a big balancing day on the 30th because it's the last day of the quarter and the last day of the month. And by the way, you could go to my website, TradeOutLoud.com. There's a block spot there and what to expect on the last day of the month, as well as the quarter. So we have more than a trifecta factor in here where the price is indicating that it may hold. So you can be ready for action. Now, tomorrow we have some big data. Also pay attention to what data you're getting, because if you're getting like strong data, and tomorrow we have some very significant data that is coming out. We have the core PCE price index, which is super important, right? And if the price is going to be bullish, I'm going to tell you something else that is going to happen. If we rotate above the high of today, and this is pattern into the Fibonacci, okay? So you can see that what I'm doing is I'm applying multiple technical analysis systems into my analysis. So I could get ready quicker, I could get more money, and I could act faster than I would wait. So chances are that if the price is going to break over this $597 area, which is the high of the day, contingent on this being the high of the day into 4 o'clock, if the price is going to rotate, and it has chances to, because we have been in an ultra power trend, by the way, since the beginning of September. Okay, so since the beginning of September, we have been in a super power trend. And if we maintain the super power trend, if the data tomorrow indicates that, yes, we're going to start continuing higher because the data is favorable for a move higher, if the price action is, if the price is trading over 597, I'm going to get in. I'm going to place my stop, and I'm just going to take these out here because I want to show you something else. Okay. All right. So I'm going to get in here. You just saw the fibs where they are and everything, but for the simplicity of the pattern, I just want to show you what I'm planning on doing. So my entry is going to be above 597. My stop is going to be below 588. And if we are going to get a rotation in price, then we are going to move higher. So this is going to be here. This is how it's going to look like. Okay. We're going to go back to the high of the day. That's going to be the first target. And then we're going to look for a continuation higher. And a lot of you guys are going to ask, how high can it go? Because this right here is the all-time high. And that is a great question, because the way I calculate my extensions is by using the same fib tool. Okay. So at this point, what I do is I go back. So I hope this is helpful, guys. Just let me know if you have any questions, if this is helpful. All right. So let's say that we got this rotation going. Okay. So if we get this rotation going into, let's say in tomorrow's session, because today is not going to be an option, so it's not going to happen. We want to find out where we're going to go and what is the next target above the all-time high. So I'm going to use the same Fibonacci tool. I am going to punch it from the high to low. And here's the low. And I'm going to find out, oops, sorry about that. Okay, so ah, okay, hold on, hold on, hold on. We're getting there. Okay, let me just do it again. All right, so we're going to find out. Okay, let me just take these out. It doesn't want to. Okay, never mind. I'm gonna do it again. That doesn't, it's glued there for some reason. So swing high to swing low. We find out where the price targets are. So I just wanted it to zoom it in here so you guys see the levels where they are. Okay. So this is the all-time high that we had into the 602.96. And if the price action above trades above my entry price, which is, here it is. I don't know why it's not doing it. Okay, here it is. I'm just going to drag it manually. So if it takes out the 597 here, I'm going to go long. My stop is going to be here. I'm going to have two targets into the high of the day. So the fibs are helping me with the target. So the first target is going to be into the 600. The second target is going to be into the 600. And because we're trading into all-time highs, these are going to be my immediate next targets. So the 606, 607 basically, and let's call it the 611. Okay, so these are going to be my targets. Now, let's see if this trade is going to be profitable. Okay, so we're going to go back in here. And we want to calculate and say, okay, is this trade going to be profitable? Okay, so I'm going to take it here. And remember where we had targets, right? So we had targets all the way to 620 or so. Okay, 611, let's say 611 right here. Let's put it at 611 first. Obviously, it has more room to the upside, but let's just put it here. So at this point in time, if the price action is going to start moving higher, here it is, okay, we're going to have almost 2 R's into the extension. So that is how you calculate whether, you want to, how you calculate targets above all-time highs. So you can have a measured move just like institutions do, because this is how the institutions are calculating the targets. They don't go by, oh my gosh, it's going to run to the moon. It's going to make a new all-time high. I mean, where? Okay, so you have to have all these answers. And this is how you do it. So let me know, guys. Type a 1 in the chat box here if you find this helpful. Okay, and this is literally my train of thought and how I calculate my entries and how I forecast my entries, because I'm anticipating a buy over today's high, and that is into tomorrow's session. So I can forecast a trade into tomorrow. So you can place alerts. You can even place a buy limit order at the end of the day today. Okay, but you need to have the end of the day. Okay, because you don't, what if today we're going to get a rally and we're going to close, I don't know, around 598 or even higher? Then tomorrow you're going to consider that high, not this high that we talked about right now. So I really hope this is helpful for you guys. All right, so let's go back in here and let's chat some more. Okay. So it's not about the trade as much, but it's about the risk and the management. Risk is very important, and the amount you risk on the trade should be the same on each and every single trade until you grow your account by at least 40 to 45%, and then you can increase your risk size. For swing trading, because I've been doing this for so long and I apply a little bit more risk, I'm right now about 4 or 5%. The norm is about 2%. Okay. So typically about 2% per trade or 1% per trade. When I day trade, I use 1% because that is way riskier. I allocate 6 trades a day. I don't take six trades a day. For example, today I took only 1 trade into my day trading, and I'm not going to risk anything else, right? Because I only trade the power hour in the morning. That's it. I'm done. But let's take a quick look at this stock right here. This is UNH. This is a trade that we have executed into our program. This is a base breakout. You can see the risk to reward level. And again, this is the target right here. Have the appropriate risk to reward ratio. 3 to 1 is ideal. You're not always going to get that. So be happy with what you get and manage diligently. This is Broadcom. Again, this is the trade developed a trade that we closed, but this is, you can see the entry, the stop, and this is the first target into the first resistance. Be very careful with resistance areas, whether they are into all-time highs or projections. The price action tends to reverse as it is targeting that specific area. That's Hood right here. Great home run that we had in Hood. AEO into a breakout. This is the forecast target right here. So have everything pre-calculated, because when you have everything pre-calculated, it's so much easier um, to play your trade because you have a plan for the trade. And I showed you what I do with the plan of the trade, how to plan the trade. This is RKT. This is one of our mega winners as well. This is risk to reward ratio. And again, don't use just Fibonacci's. Fibonacci's are great for targets, but if you have additional um, um, if you have additional resistance areas through the charts, please consider those as well, because it's about price action. It's about everything that you have on the chart. You cannot just trade Fibonacci and say, oh my gosh, I'm going to be so complacent. I'm going to wait for that Fibonacci retracement, or I'm going to wait for that Fibonacci target, or I'm going to apply Elliott waves or what have you. You have to make sure that you are very diligent into reacting and having a plan for resistance areas. Teresa, what is the green? I just showed you. It's the risk to reward ratio. Okay. So who's doing trading for? I'm going to raise my hand right now. It's for me because I don't like to get glued to the computer. And it's for busy professionals, part-time traders. It's for retirees. It's for investors that are looking for faster returns, by the way. So you don't have to sit in a trade like forever. It's for entrepreneurs and definitely for really busy business owners. So let's get to business here. When to buy. When to buy. Now, I showed you an example with the Qs, and I showed you exactly, and you guys are going to be here tomorrow, so you're going to be watching the Qs, and I want you guys to watch the reaction of the Qs. And by the way, no action if it doesn't trade above today's high. Okay, so tomorrow, if it doesn't take out today's high, then the trade is canceled, right? You're not going to get in. All right, so when to buy swings. Let's start with this. Buy swings when the risk to reward ratio is stacked in your favor, regardless of what any kind of indicator is telling you, right? You have to make sure that you know your system, that you know your setup, to know exactly where your entry is, where your stop is, the way I showed you on the Q in the Qs, and to know where the upside resistance or downside support is if you're taking a short, okay? And make sure that you position size for that. Now, timing the entry. A lot of times I like to use the end of the day, and this is the suggestion that I made in the Qs. And what I said is wait until the Qs close, right? These are the Qs over here. Wait until the Qs close, or any stop. For example, I don't know, Nvidia. Let's talk about Nvidia. Nvidia is very bullish. Nvidia has actually a different type of pattern, if you will. Nvidia has been very sideways. You can see the block right here. This is a sideways range, right? It has heavy resistance to the upside, heavy support to the downside. And if you're looking at a monthly chart, you're going to see that it's into a compression pattern. So the monthly's into a compression pattern. We had an indecision candle here. We didn't take out the indecision candle, so we are not getting a continuation. But hear me out. If we are going to start trading above 184.48, we're going to start really crushing it to the upside. And Nvidia has a tendency to perform really well into the end of the year. Okay. And as it goes, and for this example only, just want to show you the performance, right? From let's say November 2022, like here's October 2022. Bam, higher, right? Higher. Okay, so that's good. This is January. And by the way, this is the pullback, October, and then went back up. Okay, so this is into a buy pattern as well. And you want to find out, like if you're a long-term investor, you want to find out why is this stock basing here? Okay, you can find answers in fibs, right? And what you want to do is calculate a retracement, simple retracement, right? I'm sorry, projection. And you want to find out where the targets are from for this pullback right here. And you can see here the reason why it is basing here. It is basing at this level at 171 is the 1.272 fib extension. And this is a resistance area. Now, the next resistance area is into the 1.618. So this is a big deal. This is huge resistance right here. The fact that it's consolidating at this point, and it has been consolidating for 3 months, right? Almost a quarter. I'm going to show a quarter in the quarterly chart in a second. It shows us that if we break above this whole entire range right here, we're going to start moving higher. Okay, and you could apply the system on any time frame. Don't use it on smaller time frames for day trading. No, but use it for swing trading time frames. And if we blast over this area, we're getting into the core target. And this is the core target right here into the 2.618. This is a huge tradable void here. So when the price action is compressing, it's just showing that it has a much bigger target to achieve. And it cannot do that without either having a steeper pullback where it could actually generate and create a really good foundation for the next leg up. Okay. And by the way, take a look at the quarterly chart right here. So this is one of the prime stocks for window dressing. So if there could be a potential breakout that is going to happen within the last 2 to 3 days of this quarter, this is going to be it, because this is going to be high play probably next week, Monday, Tuesday. Okay, into the end of the quarter. And by the way, this is this year. Phenomenal last year and this year. Look at the bottoming tail, shows tons of buying pressure coming in. Okay, so now you want to find out and say, okay, where's my entry in here? And the best entry for NVIDIA is over this whole entire base. Okay, and if you guys are having a hard time, see where the high is here, just navigate to the weekly, okay, or navigate to the monthly. So much easier. Okay, so much easier. So you can see here that the breakout point is over these highs. So that is where you want to put your buy limit order. Okay, you want to get in there and you want to set it for the targets that that I've mentioned. All right, so let's continue. Timing. So I showed you the end of the day. I'm waiting till the end of the day. Okay, trigger time's often the best. Follow through comes in the first 30 to 90 minutes of the trading day. So still in the power hour. So if you're watching the market in the power hour like I am, or trading the power hour like I am, okay, that's the best time, because the best patterns are forming around that time. Now, never buy swings. Chasing at the top. Chasing at the top. So when you're seeing like 3 to 4 bars to the upside and then basing into the highs, I don't buy it. I wait for a pullback. In the middle of no man's land, right? Like NVIDIA is a great example here, because NVIDIA, if you're looking at it, right, it's in the middle of nowhere land. This is not a buy signal, right? So it's in the middle of the range. So I'm just going to bracket the range right here so you guys can see it. This is the top of the range. This is the bottom of the range. And this is in no man's land. It's not going to have any kind of commitment. If you buy it here, tomorrow you could get a surprise gap down, or you could get a little bit of surprise gap up, but all in all, you need to break out above the high and above the low. It's very simple. Trading is very simple. It has very, very simple rules. Ahead of major economic news like FOMC, CPI numbers, etc., or in a dying trend, and especially into the end of the quarter, do not buy, do not try to get any bottom pickers, right? Don't be a bottom picker. And on low volume and illiquid stocks. When you see that the market is on low volume, today's a low volume day. I showed you in the Qs. Lower volume than what we had yesterday and the day before. So on low volume days, you don't want to pick stocks, right? Look at the volume in NVIDIA right now. Do you guys think it's a good idea to buy it? Look at the volume. There's nobody interested in buying or selling at this point. For example, let's take a look at Apple. Okay, so Apple, look at the volume in Apple. Nobody's really interested. Let's take a look at Amazon. Amazon, look at the volume in Amazon. Very low volume. Okay, so you have very low volume. Don't buy on low volume days. So bottom line, swing trading is about precision and patience. You buy near support or breakouts and never buy into FOMO spikes, right? You see the stock running or you see the price running, you're like, oh my God, I gotta get in short, I gotta get in long. Okay, stay away from the chop zones. Chop zones are sideways ranges, and of course, downtrends, right? Okay, some entry rules: trade with the trend, buy near support or resistance, depending on whether you're long or short. Risk to reward at least 2 to 1. You have to have, again, the volume confirmation. You need to have the money behind the move. Avoid new entries right before earnings or major news. And heads up, we're going to start earnings season, guys, in 2 weeks. So I'm super excited for that because we're going to get some fundamental news and fundamental volume into the market. And here are some risk management rules. Risk a fixed percent per trade, whether it's 0.5, 1%, 2%, 3%, 5%, whatever it is. If you're extraordinary, amazing, and successful at trading, you could go ahead with 3% and 4%. If you're not consistent in trading, 0.5 is more than enough for you. Position size based on the distance between the entry and the stop. No emotions. And literally, you shouldn't have any emotions. If you have high emotions when you're trading, you're doing something terribly wrong. Like you're doing it wrong and you don't know what it is. And you need to talk to somebody about it. Always set a stop loss at the time of the entry because stop loss is going to help you calculate the risk between the risk. It's not the risk tolerance. It's totally different than the risk tolerance that we're talking about in investing. This is fixed risk. Trail stops into strength so you can book some of those profits. Don't gamble and never risk more than 5% of your account across open trades. Also, let's finish the year together and stronger than ever before. I just want to show you a P&L. And by the way, we are still in PLTR. 99.22% is where Robert initiated the trade. I got it at 99.10. And he's so happy. He said, "You're the real deal. Thank you for all the hard work you do to find highest trades. 100 shares of PLTR have paid for my yearly membership. I'm in it for life." This is Robert, his real P&L, real results. This is another email that I received from one of my members. You can see his beautiful family right here. And he wanted to take a moment to express his gratitude. And without my coaching and my program, he wouldn't be able to take his family on a beautiful vacation in Turks and Caicos. And I have a special for you guys. I know I have like about 4 minutes left. So if you want to get in today, I have been running the stock swing trader for 15 years. And prior to this, I had an, let's say, unofficial stock swing trader that I had personally with my friends and a group of traders that I was sharing my trades for about 5 years before I have officially started the program and say, you know what, this is my time, this is my knowledge. I just have to get paid for it. It's only fair that I do all the work, right? So the stock swing trader is an email. It's a newsletter, but it's way more than a newsletter. It's an email. Consider it an email that is delivered each Monday night. Depending on the market activity, I sometimes send it on Sunday. Sometimes I send it on Friday, depending on how we need to position for Monday. And it's a comprehensive market analysis, macro to micro. You get new market focus and themes because each time we notice some themes, we notice which sectors are hot, which sectors are cooling off. We're analyzing sector performance, market performance. We're getting a technical market overview for trades and video for the week. You're going to receive a video. Sometimes it's about 10 minutes. Sometimes it's an hour. Sometimes it's 30 minutes, depending on how much we need to discuss what happened in the prior week and what we can expect in the new weekend, depending on how many trades we have for the new weekend, the context. You're going to get the earnings calendar. You're going to get the economic calendar and the impact for the week and how that economic calendar is going to impact that week and what stocks are likely to get impacted. You're also going to get access to a performance portfolio that I'm going to share with you in a sec. And you're also getting a pre-launch access to my investing picks that we're going to launch very, very soon, hopefully into the end of the year because I've been extremely uber busy this year. You get a private X feed that I'm going to show you in a sec. You're going to get platform layout. So you're not going to meander with different layouts in your platform. You're going to get student personal support. You're going to get a risk sheet. You're going to get, so you know how to position size if you have never position size or if this concept is Greek to you. Okay, and money management cheat sheet that it is that's in the newsletter. So the stock swing trader is $299 a month, and for now, for today and tomorrow, just these 2 days, we have it for $97 a month, and then it goes back to $299. We have, like, in this program, I could tell you right now that the majority of traders that are in, they have been with me for 10 years, 15 years, and all new traders that are coming in, they're never unsubscribing because it's that good. Okay. So let's make 2025 your most profitable year because we still have some just a few months to go into the end of the year. So I just want to show you real quick, and I'm going to put the link right here. This is the link. Okay. And here you go. If you're interested, you can read all about it. It's $97. This is going to go away on Friday night. So if you want to maximize your earnings by trading the hottest trends in today's market, this is the program for you. This is the page. It tells you exactly what we do and what we focus on. It's more than I have covered in this presentation. You're going to get access to real-time performance. I'm going to show you that in a second. And you can see this is the portfolio. So transparent results. You can get, these are some of the reviews that we had from our traders. And if you're ready to take the next step, just click the link and join. Just want to show you real quick here. This is our performance portfolio. Oh, and one other thing that I wanted to share with you is that if you go on our website, you're going to, it's not opening right now, so I'm just going to let it open. I've had some issues with my internet lately, but if you go to my website, TradeOutLoud.com, into the swing trading service, you can find my performance portfolio since 2010, I believe. So, I mean, who has that? Nobody. Okay, so transparent performance. Yeah, it's here. Okay, so if you go here under services, you go to stock swing trader and you scroll all the way to the bottom, 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 bottom. It should have been a headline because nobody has this. You go to view swing trading performance. Obviously, you're not going to get the September trades in here. Okay, so I'm going to go scroll back down very, very quickly before my time runs out. Okay, so the August and September is not going to be posted here, but September is right here for our members only. These are the trades that we did. Look at this, 146%, minus 31 here, minus 90. Oh, here we have some trades that are still active, by the way, and these are Home Depot still active. So it's in the positive. Here we still have lots of trades. We are still in Apple, we're still in Walmart, we're still in Bull. So these trades are still active right here. So we're actually positive. And you can see here the performance 146% here as well. And a lot of information. And these are our trades for September in here. And by the way, it says here 100%. This is the way it was designed. We're going to have a different performance portfolio next year. So this is when, for example, here, if I type in 60, okay, you can see that it goes to 5.6. Okay, so it's just a matter of, it means that the trade is not closed. Okay, you get a hot list here for ideas and for investing. These are some of my investments for this year. I also have a track performance for my investments. Okay, and here you have position size calculator, which we share it with our traders. You have indicators in here. You have option expiration calendar. You have the holidays. You have the P&L explained, which is super easy. The profits and losses are calculated based on the price of the stock or the ETF at the entry price and sell price that members receive in real time. And the stock swing trade performance is the cumulative total of gains and losses for all trades. So here you are, those results right here. This is the way it was designed right here with this. But like I said, the results is what matters. Okay. It's beautiful. Yeah. Okay. So if you are interested in joining our program, jump right in. We're waiting for you. And this is the link right here. Thanks so much, David, for having me here today.